There happened, Captain. Okay, excellent. And away we go. Welcome. You're listening to the Best of Investing on Talk 910. You know our show. It's where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, here's our format. A few guys, in this case just Mark and I today, sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender. And our phone number is 888 912 1190. Write that number down, 888 912 1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. And the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Such a deal. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. And today's trivia theme is stars in TV and movie roles. Our website is, bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And we're also on television, Comcast Channel 26 and AT&T Channel 99 on Saturdays at noon and Sundays at 6 p.m. One quick thing, we want to welcome our newest sponsor, High Tech Screens and Shades in San Rafael. And I just got my shades from them in my home. And I'll tell you, you know how it's been hot here pretty recently?
Absolutely.
Okay, well, my home office is now 15 degrees cooler because of these shades. These things are awesome. Check them out at hightechscreensandshades.com. Today's special guest is Denise Winston, who is a 25-year veteran in the banking industry, and she's going to inspire us with her practical guide to survive in any economy. Denise, welcome to the Best of Investing.
Great to be here with you, Edward, Mark, and all of your listeners and viewers out there.
Hey, Denise, Mark here, and you also write in your book about kids and money, and let's start out with that because I've got a 17-year-old going off to college who I think I need to help her out a little bit more with managing her cash. What are some of the things that kids need to know about money before they graduate high school?
You know, probably one of the most important things that somehow we've gotten away from in teaching our kids about money is really about, we have 2 currencies in life. We have one, which is money, and we can make more of that, but we also have one called time. And unfortunately, a lot of our kids don't understand that how they spend their time matters. And, you know, your daughter's going off to college, she's 17, hopefully she's got a grant or she's got some scholarship, and she probably wrote an essay or did an application.
My wife wrote it.
Don't tell the college that.
Well, you know, if you think about it, if your child is able to spend an hour writing an essay, and I know several kids that have written an essay and they got a $10,000, scholarship or a grant. And ultimately, what we need to teach our kids is that when they spend their time, right, that child just spent, made $10,000 an hour. When they start thinking about how they spend their time and the things that they could be doing, especially for those that aren't going off to school right now, or maybe they're going to be home for the summer,
yes,
they have a little bit more time,
yeah,
they can utilize their time very wisely.
Yeah, but Denise, the unfortunate thing is that when they go off into the real world, they're going to ask for $10,000 an hour the first job.
Well, we've got the reality check there. But the great thing about it, they do that. They start understanding that when they do clock in at their job, that they are trading their time for money. And you're right, unfortunately, a lot of the kids right now that are graduating with college degrees, they feel like a job is beneath them. So, they say there's no jobs out there. It's just not the job that they want to pay the amount that they think they should be paid.
Well, that brings me to the next question is why do you think it's so hard to teach kids about money?
Because we are overwhelmed, stressed out, and confused in general. And, some of the states are out there trying to teach kids in schools, and a lot of times the teachers are not, they don't feel qualified to teach on the subject. And I can tell you, I've spoke to over 12,000 graduating senior high school students in the last 4 years, and what they tell me is they learn more in 1 hour with me than they do in a whole, semester of econ, because it's so hard to learn about money from a 3-inch textbook. It's not relevant
Sure.
and practical for them.
Well,
and quite frankly, that's why I wrote my book, is because if I've got a kid for an hour, like your daughter, she's going off to school, she's leaving, she doesn't like to always listen to her parents or her college, professors or teachers, you give them the book and go, hey, I've actually lived on my own since I was 16. Here's some stuff you need to know when you encounter going to the bank, open an account, or, getting a credit card or, buying a car, or you want to eat out, how do you deal with those financial situations? It's all in the book, and they can go straight to it.
Well, Denise, a true story, and I've told this on the air once before, but that was a while ago, so I'll repeat myself here, is that when my kids were little, I helped them set up their lemonade stand. We lived on a very busy street, so it was a perfect lemonade stand. But I told them, I said, kids, I'm not just going to give you this. I said, you're going to borrow the money from me. It was $10. I said, we're going to go to the store. We're going to buy the lemonade, buy the sugar, whatever else we need. And as soon as you sell the lemonade, the first $10 comes back to me. Now, I'm not going to charge you interest, but I said, but then don't tell anybody else this, because else they'll think I'm a softie. But and they understood, and they paid me back. And then sure enough, they started making a little bit of money, and they really enjoyed it.
Yeah, that's the best thing. Was that Mark that said that?
This is Edward.
Edward. I love hearing stories where parents are really teaching those kids those experiences, and I often call them financial field trips, and it's one of the easiest ways for us to really teach kids about money, and it's about those experiences. Unfortunately, when we think about our kids, we wouldn't send them off, out into the woods on a hike without some basic survival skills, right? When they're 18, you wouldn't
Sure.
want them hiking 80 miles in the Sierra. You would want them to know what they need to know, and that's what we need to teach kids about money. Is we can't send them off into the rest of their financial life without some survival skills to be able to deal with money in the real world, because it's harsh out there in the real world of finance.
Yeah, I tell you, the problem is now I get a bill for everything. Setting the table, doing the dishes, saying I love you. Can you imagine paying my kids to say I love you? That's just terrible.
Yeah, it's interesting how you can use allowance as one of those things, the things that we've got to provide a lot of experiences, and there's a lot of different controversy over it, which is right. Do you want to pay your kids for the chores, just like maybe what you're talking about doing, or do you just want them to deal with money and learn how to budget? And it goes a couple of different ways. There's a couple of different schools of thought on that.
So Denise, I read that you say that a child's credit score is just as important, if not more important, than their GPA. Can you expand on that a bit?
I can, because boy, is this a big one. As a 25-year former banker, I can tell you, your credit score is very important when you borrow money from the bank, and it can cost you literally hundreds of thousands of dollars if you have that score. But what a lot of people don't understand right now, that might be in your listening audience, is that your child's credit score can determine whether or not they get a job or not, because a lot of employers do a background check on their and it includes a credit score check. And the reason why, there's a lot of them out there, but on top of that, their credit score can also determine where they live, because landlords are going to look at it. Insurance companies, a lot of them look at your credit score to determine whether or not you can have a policy. And yes, banks, and you've got cell phone companies even looking at it. So the reality for us, we need to understand as parents that we cannot let this go by the wayside, because if we send our kid off to school, they get their degree, but they've not managed their credit properly, they may not get the job that they went to school and trained and worked so hard to get. So
in fact,
their earnings potential is huge here.
Yeah, Denise,
so,
they also need to check.
Everybody's going to deal with money, no matter who you are or where you come from.
Yeah, Denise,
Yes.
But what I think is important too is that the kids, and I don't know if they can do it, we probably have to do it as the parents, check on the kids' credit scores early, because there are situations where prisoners were stealing their credit scores, and I guess it doesn't have to be prisoners, it could be anybody, and the kids don't know it for years.
Well, I just had a conversation earlier today, and a guy's friend actually checked his credit, and somebody had just come to the U.S., taken over his credit score. He was in a good position, because the identity theft actually raised his credit score by 100 points, because he got a loan and made all the payments on time for a year. And,
That's great.
Right. People, get your credit. And in the book I cover, there's an entire credit section about understanding and managing your credit, because I believe that your credit score is one of the most overlooked financial tools that we have, not only for investing, but when you've got investment properties and you have a good score, you get a better rate. So there's a lot of different reasons why you need to manage. But you're right. Absolutely, identity theft is one of those things that you've got to cover on a regular basis, at least on an annual basis.
Denise,
you're right.
Stay with us, because we're going to finish off one more question with the kids, and we're going to move on to entrepreneurs when we come back from commercial break. And also, Denise has a special little giveaway for our listeners. Now, last week we had a special trivia contest where the winner won a 2-night stay at the beautiful Mount View Hotel, and the question was, 3 out of 10 people admit they have done this after 11 p.m. What is it? Mark, what do you think it is?
Baked cookies? I don't know.
No. Bought something from late night TV.
Oh.
You know, like, I don't know if it's QVC or what. So, experience the art of relaxation at Mount View Hotel and Spa in Napa Valley. Mount View Hotel and Spa is a green hotel celebrating 100 years of hospitality and set in the center of Calistoga's many pleasures. Contact their friendly concierge staff 24/7. Call 800-816-6877 or visit them online at www.mountviewhotel.com. And I don't know if you guys have checked out that hotel, but the pictures are phenomenal. Listeners, you got to check that out. Okay, here is our first commercial break trivia question. And again, the theme is stars in TV and movie roles. Okay. Who played Jessica Fletcher on TV and Mrs. Potts in the movies? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Who played Jessica Fletcher and Mrs. Potts in the movies? Remember the, what was that? Come on, what was that one? The Beauty and the Beast. There we go. 888-912-1190. Make sure to include your name and your email address and speak slowly and spell out your email one letter at a time. And don't touch that dial because we're going to be right back. What are you doing?
I couldn't help
I was
myself.
confused by the whole Mrs. Potts thing, and then
Really?
Beauty and the Beast.
You're
Okay,
throwing
now I
this
gotta
at
talk
me.
about it.
Okay, good job there, my dear.
Oh, good.
Good. Okay, so let me. I gotta save this file here. Oh yeah.
This is who we're.
That's Denise. Okay, so let's see here.
Is that really you on the cover, Denise, or did you do an iStock photo?
Yeah.
Oh, it's me. Now, I will say there's maybe a little bit of Photoshop going on.
Ooh, shouldn't have
You
said
know,
that.
you know, it's
No, I'm
funny
kidding.
because I had a marketing company design an ad for me, and they used a woman because they said that you get a better response, and it was for my financial services. Remember the woman?
You mean the
print
in the
ad,
paper?
yeah, and she was
Yeah.
attractive.
Yeah.
And so I'm online and I'm looking through some ebooks, and I was looking for a book by a particular author and when I found it, there was the cover, and there was the same woman
Oh, wow.
on the cover, but there was no but the when you looked at the book, your impressions would be that person was the author, and it was not. It was a stock photo that she used for the cover.
No
of
one
the book.
confused the two of you, though, right?
No,
You
no,
with the lady.
no. No, I am not pretty.
No. I think you're pretty. Okay. Don't worry, your wife has nothing to worry about. Okay. All right.
One guy to another.
That's right.
Yeah.
Okay, so we'll finish off with the last question here about what's the easiest way. There we go. What's the easiest way to teach young children about money, and then we can move on to the entrepreneurs.
Thank you.
Okay.
Yeah.
Good. So, you know what? Eventually, when Kramer gets this DVD, I will also upload that, and then that'll also have a picture of your book.
Okay, perfect.
So it'll look good. So you can use that for your own marketing purposes there. All right.
Excellent.
Okay. You guys ready?
Yep.
Okay. We're gonna go to the second segment right now. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with my co-host Mark Hunt of Pacific Private Money. When we cut to the first commercial break, we asked this trivia question. Who played Jessica Fletcher on TV and Mrs. Potts in the movies? Anybody?
You know, you got to ask like a movie about Star Wars or Star Trek. Then I'll get it right.
Okay. Denise, you know the answer to that one?
I do not know the answer to that
It's
one.
Angela Lansbury.
Oh,
Do you remember Murder, She Wrote? Okay, we are in the studio here with Denise Winston, who is a 25-year veteran in banking, who is teaching us all about money and kids and entrepreneurs. And we want to finish it off with the kids situation. So I was going to ask you this last question. What's the easiest way to teach young children about money?
Financial field trips and financial experiences, and you kind of talked a little bit about the lemonade stand is a great way, but really financial field trips. When I was a banker, I loved it when parents would bring their kids in and I could give them a tour and
Free samples.
directly to the child. So I recommend that you use those day-to-day opportunities to list others. Whether it's you buy my book, you give it to them, you take them to the banker has, a tour, you take them to your investment broker, your insurance agent. Those are all things that they're going to have to encounter in day-to-day life. And the more opportunities you give them, the better off they're going to be. It could be even going to the dollar store and them understanding that it's not just the dollar. We've got sales tax here. So, and they've got to do the math and the change. That's one of the easiest ways and most effective ways to teach your kids about money.
That's great. And I guess when you were the banker, did you give out free samples?
No free samples,
no free samples
at
okay.
all.
And what age do you recommend? Like 3, 4, as soon as they can understand English?
English, wait, or money.
Well, I was sorry. I meant like converse in full sentences.
Well, when your kids are young, one of the best things you can do is to teach them again about barter and trade. So if you don't want to use money when they're a child, you can use raffle tickets. It could be Coke bottles. It could be, whatever the case may be. But you can help them barter and say, okay, if you go to bed on time or if you do make your bed or whatever when they're 3, 4, 5, you can pay them in some form of currency, and then they can trade that for maybe, movie time or video game time or outdoor play. So they learn the understanding of, how much it helps with math and goal setting. So the earlier the better, but I really think that by age, 7 or 8, that's the time to really take them to the bank and start having others give them the experience of being able to converse with others about money on a fundamental. It's great to call ahead to just, tell that whoever's coming that you're going to come in and you want them to speak.
Well, I taught my daughter how to play Monopoly, and unfortunately she likes the game so much that she kills me at it. And when I don't pay the rent, she wants to put me underneath the railroad tracks.
Sounds like she might be a landlord
in the
might
future.
have one on your hands.
That's right.
So we're talking money management with Denise Winston, and Denise, what are some? Let's talk about like entrepreneurs for a moment. You talk about some mistakes that entrepreneurs make when they set out to start a business. What are those?
Probably the primary top 3 that I always saw is that unfortunately business owners didn't understand the importance of choosing their entity and actually filing that paperwork. So understanding that whether you're a sole proprietor or an S corp or whatever you choose, there's legal ramifications and there's also tax ramifications that are in there. So you really want to make sure you talk to the right person, get some advice, and set that up, and then file the paperwork. Because as a banker, normally I could never make a business loan to someone unless they've been in business, for 2 years. And if you don't file your, business license with the city or your fictitious name statement or whatever the case may be, I may have a hard time proving when you went into business. So I'd say that's number 1. Number 2, credit score is huge here. If you don't understand how your credit, what it consists of and how to manage it, can cost big. I mean, it could literally cost you $1 million. It sounds like you guys are in the lending arena. If somebody, has bad credit or has to do a hard money loan, sometimes that interest rate can be considerably higher and you're doing $1 million loan. 1% can be big because somebody has a lower credit score. And really the last one is about accounting, not having the right accounting system, not being organized. 80% of small businesses that are out there get audited within the first couple of years. So if you don't have an easy way to track that stuff and keep track of everything, you might find yourself in a world of hurt.
Okay, and then how can small business owners increase their chances of getting a loan from the bank, other than just watching their credit score?
Really, it is about thinking like a banker and understanding the process. I can tell you the majority of business owners that came in and that wanted a loan, they didn't understand that we had collateral and we wanted secondary resource of payment. And yes, we're going to look at their credit score. And everybody that was in a corporation, if they had 20% or more, we're going to look at their credit and they had to personally guarantee it. So really thinking like a banker and planning it. So if in 2 years you're going to want a new business line of credit, figure out what you need to do. Talk to your banker in advance and make sure that you understand what the situation is, really aggressively, cleaning up your credit and making sure that your taxes are showing everything they need to show in order to be, that means profitability, usually for the past 2 years, and your accounts receivable are clean.
So Denise, what are some easy ways that a small business owner could organize their finances to save time and money?
It's really complicated. Actually, it's not. It's called an envelope. The easiest thing you can do is understand that you grab an envelope, you put your receipts in it. And this is brilliant because when you're a business owner, if I have $100 in office expenses, and if I lose that receipt, that's like losing a $100 bill. So grab an have it in your car, have it in your, your purse, your briefcase, wherever it is. And when that receipt envelope gets full, transfer it to one in your office. Hopefully you have a file system that has a category for all of your tax write-offs, and you can just drop it in there and give it to your person that does the accounting, but really saving your receipts. And also, if you don't have your receipt, you can't do returns, you can't take care of warranties, price protection is out there. So it sounds silly, but a receipt is just like a $100 bill if you're buying a $100 item.
Well, what I do is, seriously, I try to save all my receipts. I actually just put them in my pocket, and then when I get to my office, I literally have like an envelope folder, and then at the end of the month, when the Visa bill comes in, I do check off to make sure that everything matches, because it's amazing how many times you'll see mistakes on the Visa statement.
Hundreds of dollars in mistakes. I can tell you, in 1 month, I got over $250 in erroneous charges. So you are dead on. That's one of the smartest things you can do. So you get an A+ for the day on that one.
Oh, thank you very much. Mark, anything you want to cover?
Any other words of wisdom on regarding your book, Money Starts Here?
I think really we all have to deal with money. And when you're overwhelmed, stressed out, and confused, a lot of times it's easy to just think that's the way it's always going to be. And it can be the way it's always going to be unless you decide to do something about it. And really what I'd like is if, you've got 2 books there for you. I'd love to get this book in more people's hands so that they can have, the information they need to take control of their lives. And whether it's leaving an extra copy at the office, people can go online and to Amazon and buy the book. And if you buy 2, you get free shipping. And it's almost the same price. So I really just think providing this type of information and sharing what you already know about money with your kids, with your friends and family, and helping people overcome this, for a lot of people, really, really tough time. There's some small things that you can do to get control of your financial life and change the overall quality of your life, but you just got to start somewhere. And money, it starts right here.
Okay, well, we have Denise Winston, Denise Austin. She's the exercise girl. Yeah, Denise Winston, sorry about that. Her book is Money Starts Here, and for the third caller that we receive, we're going to be giving her book out. Again, it's called Money Starts Here. You call the 888-912-1190 number, and we'll send that out to you. But Denise, for everyone else who needs a book and wants to get a hold of you, how do they get a hold of you?
You can go to DeniseWinston.com, and it's kind of like Winston the tire, Winston the cigarette, Winston Churchill, just Denise Winston. You can go there, and I actually have a video learning page where there's a lot of free information on there. The blog is on there. You can order the book on there. I have under the products page a DVD for parents that want to raise financially smart children. It's really there to be a resource, and I want people to be there for someone to just know and inspire and empower them when it comes to money. And think about it just a little bit differently. It's easier than you might think. Anything is possible.
And so you've got a website. Is that the one, moneystarthere.com?
Moneystarthere.com or DeniseWinston.com will get you to that site.
Great.
Awesome.
Denise, thank you so much for being our guest today.
Pleasure to be here with you and Mark and all of your listeners and viewers out there. Thank you for having me.
Thank you.
Thanks, Denise.
Okay.
All right.
All right, that was Denise Winston. And when we, let's see, before we cut to the second commercial break, we need to let everyone know there's going to be another trivia contest. And that's going to be a special one next week. And this is going to be for the Ritz-Carlton Half Moon Bay. Join us at the Bay Area's only oceanfront golf resort, the Ritz-Carlton Half Moon Bay, to experience the new Navio following a $1 million renovation. This oceanfront restaurant is excited to share its new version of coastal cuisine. Make your reservations today by calling 650-712-7040. And Mark, have you ever gone there?
I have been there.
Isn't it beautiful? It's very, very romantic. I was going to say, don't go by yourself. Make sure you take your wife, because it's very romantic. Okay, we're going to cut to the second commercial break here. And here is our trivia question. Okay, who had an early role on television as Sister Bertreel and later played Mrs. Gump in a 1994 film? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Who had an early role on television as Sister Bertreel and later played Mrs. Gump in a 1994 film? 888-912-1190. Make sure to include your name, email address, speak slowly, and spell out your email one letter at a time. And don't touch that dial because the best of investing will be right back. You know, this thing is really loud.
Yeah.
And the thing is, if I let go of this thing, it's going to fall behind there. So what I'm going to do is go like this, because I'll save this for our next guest.
You're holding that, your phone's
I
ringing,
know.
you're trying to do the it's like major distractions.
Absolutely. Save this here. We'll get into email. We received an email for you. It says that if banks loosen up their lending, will you still have enough product for your investors?
Yes.
Okay. Next
That's a
question.
good one. That's a good one. Yeah.
How you doing, Mr. Kramer?
Mr. Kramer's good.
Good.
When you're
Mr.
ready,
Gump,
he's got some
Mr. Gump.
constructive
Mrs. Gump.
interest. I want to tell you.
Okay. You just save this file and you can speak on it here. And the other guest we have for next time didn't want to send us questions. She likes to do it on the fly, so
Okay.
it's all right as long as she's got enough good stuff.
Whatever.
So, Mr. Kramer, yes.
You wanted to zip down his fly?
Yes.
Can I go home now? You're also playing the television, so
I know I'm facing this way. I know.
when you
all
were
this
talking,
stuff.
and even the last part of it,
Yeah.
you were facing that way. You wasn't looking pretty. And the other thing is, here the Jewish mother, me, is coming out in me.
Okay.
To tell you
Yeah.
that you chew on your nails a lot and it doesn't look good on television.
Thank you.
And that's why I'll try and pan away.
Good. Okay.
I'll try and pan away.
I gotta keep you honest.
But
I know. I got.
yeah.
Thank you.
Picking your nose just won't make it either.
That won't make it either. Okay.
No.
How about this?
That will make it. No,
That'll
that would be
make
good
it,
TV.
Thank you. I mean, it's funny because as I was doing this, I go, I know I'm not facing the right way.
I know you know.
That part I realized. Okay.
So we'll go to email time next.
Mm-hmm.
Got plenty of articles.
Oh, good. Good. Figured maybe we could talk a little bit about the IRS thing.
What's that?
Just about them getting in trouble for picking on.
I didn't read that one, but you can go ahead and I'll try to talk intelligently about it. I hate the IRS.
There you go. That's intelligent enough. Okay. Here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hoff of Pacific Private Money. When we get to the second commercial break, we asked this trivia question. Who had an early role on television as Sister Betrayal and later played Mrs. Gump in a 1994 film?
Is there a Mr. Gump?
Yeah,
Mrs. Gump? That'd be Sally Field.
That was very good. Did you play that guy in the movie?
He was a creep.
He was a creep. Yeah, I like that. Is there a Mr. Gump? Miss Gump? Okay,
That was the school principal for anybody. who missed
yeah,
that
that's
one.
all right. Forrest Gump. Very good. Oh, actually, that was so who played it?
Sally Field.
Sally Field.
Yes.
Very good. I'm sorry. Okay. All right. We have an email here for Mark. It says, if banks loosen up their lending, will you still have enough product for your investors?
Good question. So at Pacific Private Money, we make hard money loans, also called private money loans, largely to the real estate investment community. And that private money lending has really thrived since 2008. It's been in a very strong growth curve due to the fact that banks who were so easy to get a loan from in the 2000s, all the way up until about 2006 or even 7 in some markets, but come 2008 and the whole financial meltdown in the fall of 2008, starting in 2009, they basically shut the spigot off, and they've really only been focusing on making consumer home loans since that time. So for the last 5 years, if you're looking to buy a house and you've got good credit, hey, there's the banks are lining up to loan you money. But if you're a real estate investor and you're trying to buy rental property, you want to take advantage of those low rates and buy a bunch of property using leverage, or if you want to buy, fix, and flip, for the most part, the banks are saying no, unless you're just such a gold bullion borrower that you've got so much capital and you don't need the money, you've got a perfect credit score, and in which case, yes, you can get loans. But most of the people I've run into the last several years have been unable to get banks to make a loan, or the process is so arduous and takes so much time that it just doesn't make any sense
Well,
for them.
it seems like even if the banks do loosen up, the advantage you still have is speed, because they're always going to have
Right.
to get their own appraisal at it takes 6 weeks, et cetera.
So here's what's happened since 2008. Even if the banks decide that they're going to go back into that broader section of the marketplace and start making loans to real estate investors again, what's not going to happen, and this is just, I'm positive about this, they're just not going to be lending the way they were in 2004, 5,
Sure.
and 6. It's just, easy money is gone. The state, now, that doesn't mean that stated income products won't come back, but they've passed so many new regulations in the last 3 years, particularly with Dodd-Frank and all of that. They want to, the government has decided, long after the horses have left the barn, we're going to pass all these laws so that never happens again. Well, it's not going to happen again. The banks are not going to loosen their lending criteria as such that it will, be anywhere near what it was like in 2004, 5, and 6. So you're absolutely right. The banks have made it harder to borrow. They're going to continue to make it more difficult to borrow, particularly for real estate investors. So regardless of what happens, as I'm looking ahead and doing planning and projections for our company in the years ahead, I have no doubt that we're going to continue to have lots and lots of strong borrowers, lots of product, particularly when it comes to real estate investors who need to close quickly.
Okay. And what's the interest rate you're paying your investor clients now?
Well, I just came back from back-to-back private money lending conferences. I was gone last week, Thursday, Friday, and then Monday and Tuesday I was in Vegas at another lender conference, and I met a lot of private money, hard money lenders from around the country. And interestingly enough, the San Francisco Bay Area, and I kind of knew this before, but I just was able to reaffirm this talking to other guys from other parts of the country. We have the cheapest hard money in the country here in the Bay Area.
I'm going to guess that's because there's a lot of money that's prevalent.
That's exactly right. There's so much wealth in the San Francisco Bay Area, and so there's more money chasing the quality fundable deals, and so just it's supply and demand, and so and the loans are larger. That's the other thing that drives it down too. So we'll do a $500,000 purchase loan on property that in Phoenix might be $200,000 purchase loan, or
Sure.
Or in other parts of the country, a hard money loan of $30,000 to $50,000 is an average loan size. So they'll charge 5 points,
Well, of course,
15% for something like that.
Yeah,
'cause they gotta-
because 30,000 times 5 points is still only $1,500.
Right.
You still have to make it worth your while to do the loan.
So to answer your question, what's it costing now? So a private money / hard money loan, and I'm using it interchangeably because private money and hard money is essentially the same thing in the way I use it. So 10 to 11% interest rate. Again, these are short-term
That's what
loans.
you charge the borrower.
The borrower, right? So for a 6-month, 12-month, 18-month loan, the interest rate's likely to be somewhere between, let's just say on the low end, it could be as low as 9, 9.5, depending on the loan to value, and as high as 11. And generally, most of the loans we write are falling in the 10 to 10.5% space, with points between 2 and 3, which I think is actually really good. It's still pricey, but gosh, just a few years ago we were getting 4 or 5 points on every deal. So competition has driven the cost to get a hard money loan down.
And the rate that you pay your investor clients?
Our investor clients generally get 1% below the note rate, sometimes a 0.5%. It just kind of depends on how we frame the deal. So we've got investors who are earning anywhere from the low to mid 8% on their money fixed with payments monthly, all the way up to as much as 10%. So it's a pretty good spread. And again, the quality of the loans right now are higher than they've ever been. I'm working on a bunch of deals right now that I can't believe the quality of the borrowers. It's just they can't get the banks to close fast enough. That's usually the deal in a hot market. And we'll talk a little bit more about this in the coming segments, because there's a lot of articles about how hot the real estate market is right now. But one of the one of the avenues of hotness, if I want to use a strange phrase here, is that to get a house today in this competitive marketplace, you need to be able to close quick. And
Yeah.
so if you're competing with an all-cash buyer and you want to use bank financing, and it takes you 30 days to close, well, the seller's probably going to go, you know what, I'm going to go with this guy that's going to close in 14 days. So we're doing a lot of loans for people who don't need to use hard money, but they're using it because they know we can close by next Friday if they have to.
And they can still eventually refinance it out with a conventional lender at some
Right.
point.
It makes the transaction itself, the cost of the house, pricier, but it's the difference between getting the house and not getting the house. So what's more important?
Exactly.
So,
And I know that there's going to be some listeners out there who want to get a good rate of return on their money. So how do they get a hold of you?
well, if you're a consumer with capital you're looking to place to try to boost your yield on your savings, or if you're a real estate investor and you're looking for some alternative sources of capital, you can reach us. Our website's pacificprivatemoney.com. That's all one word, of course, pacificprivatemoney.com, or call our Bay Area office at 415-883-2150. That's 415-883-2150.
All right, and before we cut to our next commercial break, and afterward, I know you've got a couple of very interesting articles you want to cover.
Indeed.
I want to talk a little bit about the IRS. Holy smokes,
They've been in the news lately.
They did. They got a little bit of trouble, and the funny thing is that they obviously went in. I say obvious. They went after people. Company nonprofits. I think it mostly was with the names, Tea Party or something. But then they also went after any organization that was trying to make sure that the Constitution stayed a constitution. You know what I mean? And it's like, gosh, isn't that sort of what America's supposed to be about?
Yeah, well, Tea Party and Tea Party related groups. It's I guess they're not favorite in Washington today, given the balance of power right now in the Democrats. So,
All right.
I know you and I tend to swing a little bit more on the conservative side of things, and particularly being independent business owners and ones who don't want to pay more than our fair share of taxes.
But wasn't that years ago that the leaning left liberal groups used to get all upset because theoretically the IRS and
the FBI were going after
them.
the liberal groups.
But see,
right.
it's okay if you go after the conservative ones.
Well, the pendulum swings both ways.
Yes,
right?
it does. Okay, we're going to cut to our third and final commercial break. Here's a trivia question. Who played both Vinnie Barbarino and Vincent Vega? There's a lot of V's in there. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Who played both Vinnie Barbarino, remember? Barbarino, there you go, and Vincent Vega. Make sure to include your name, email address, speak slowly, and spell out your email one letter at a time. And don't touch that dial because we're going to finish up here on the best of investing. Okay, what was all this about?
Oh.
You were picking your nose.
When you edit
Uh-huh.
and you're watching it,
Okay.
anytime I see that, I know that I have to cut all that out.
Oh, because
I have to cut everything, all the advertisement out.
Oh, because of the advertising. Oh, okay.
And when you advertise the Lighthouse, that's where we got caught.
Yeah.
Remember, we got away with it for a while.
I knew there had to be
Then we got a warning letter. Warning.
Warning, Will
Any
Robertson.
more advertisements will throw you in the street.
We have to finish up this one because this lady's going to call here.
Oh, okay, well, we can go right away.
Yes.
How much?
7:47.
Okay.
That's an airplane, huh?
Let me save this. Save
Yeah, we'll be done with plenty of time before she calls.
Yeah, start now. Appreciate you doing double sessions like this. Oh, yeah. Maybe a nice little couple weeks break too, It gives Mr. Kramer a break too.
Hey.
Gives you a break by doing these double sessions, I'll be gone in
When are you leaving?
the 10th to 25th. Okay, we'll get into the articles. You got not ready.
Go.
Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Humph of Pacific Private Money. When we cut to the third commercial break, we asked this trivia question. Who played both Vinnie Barbarino and Vincent Vega?
That's an easy one. Johnny Travolta.
John Travolta, that is correct. Okay, Mark, you have a couple of very interesting articles you want to share with us.
Yeah, well, the economy is about the haves and have-nots. And what I mean by that is, you've got headlines about the real estate market, hot, home prices increasing. And then in this week's newspaper, there's also an article with a headline that says, discouraging news slows market. It basically says that there's signs of a slowing economy, combined with some comments that the Federal Reserve officials made this week. And so they talked about, the article talks about there's plenty of discouraging news. Applications for unemployment rose last week, manufacturing slowed, Walmart stock went down after they warned that customers were spending less at stores. So now, on the one hand, I don't like a superheated economy. I kind of like slow and steady growth. You want to try to avoid bubbles, and we've had our share of bubbles in our last 15 years. And our generation here has experienced two of them. The real estate bubble and the tech bubble at the end of '99, and so. There is an article, notwithstanding the discouraging news of other economic sectors. A headline in this week's Chronicle says, "Is real estate headed for another bubble?" And so, subheadline, just a year since the housing market hit bottom after the biggest plunge in 8 decades, signs of excess are emerging.
Back in 2005 again?
Yeah, but and here's a gentleman quoted who's co-director for the Center of Economic and Policy Research in Washington. He's saying if prices keep going up at this rate for another 6 months, we will have a bubble and people will get hurt. Well, that's one man's opinion, but it's probably not the only person who feels that way. I mean, we've really seen in this article is actually about nationwide. It's not just the Bay Area, because we've done some shows recently. We've talked about Bay Area home prices in some markets up 30, 40, maybe even 50% from the low, which is just
amazing,
unbelievable.
Well, look at the stock market. The stock market went from the low of 7,000 back in 2009.
So nationwide, March to March, home prices are up 11%, and that's the biggest gain since the height of the real estate boom in 2006, the biggest annual gain. So, it's a worry. It's nationally, they say existing home sales are still off about a third from their 2005 peak, and construction is still down. But I know here in the Bay Area, a lot of regions are at or near their 2006 levels. So it's pretty interesting what's going on in the market today.
Wow. Okay, thanks for sharing that. Any other exciting news to share? Got about 2 minutes to go.
Yep. The median home price in the Bay Area hit $510,000. We'll also close out the show with a little bit of real estate news. And eager Bay Area buyers propelled the region's median home price above $500,000 in April, its highest in almost 5 years. So again, the Bay Area is getting back to normal, I guess, whatever normal means.
What is normal?
I don't know. The Bay Area median peaked at $665,000 in the summer of 2007. So that was generally considered the height of the market, $665,000 in 2007. So now we're at $510,000. So even though in some markets like the screaming hot San Francisco market or the Silicon Valley market, where some homes are now valued higher than they were actually at the height of the
really? Wow.
bubble. Yeah, it's amazing. Some markets barely got touched, and other parts of the Bay Area went down quite a bit. So, but median price, we're at $510,000. It's up 30% from a year ago. Now we've talked about what median means. It doesn't mean the house you're living in right now is worth 30% more than it was a year ago. But the median price, where half the homes being sold are above that price and half the homes being sold are below that price, that valuation is now $510,000, and it's up 30%. And it's just above March's price. It's up 17%. So real estate's only heading one direction right now. There's fears of a bubble. Stay tuned.
Well, that's what gets a little bit nerve-wracking is if it goes up too fast. That's what happened in Silicon Valley.
Well, it's
And
not
things
sustainable.
crashed.
You know,
Exactly.
the tech bubble wasn't sustainable. The real estate bubble we suffered through in 07 and 08 was not sustainable.
But how do you stop it though?
Well,
How do you
we
stop
hope
people
in
from
this-
the supply, with the demand side?
well, you can't. As long as there's inexpensive money by the Fed, there's likely to be appreciation. But at some point in time, it's going to get beyond affordability, and then it's going to cap out.
Yeah, good point. Okay, and we are going to close out the show here with our thoughts for the day. And it's interesting because we had mentioned about the IRS, and they kind of come into this thought for the day because we always think about the IRS, right?
Too often.
That's right. Well, remember the Occupy protests? I saw an IRS agent with a sign that said, "Corporations are people too." Now, it turns out that, according to the IRS, the definition of people includes corporations. The
Yes.
distinction is that human beings are individuals as opposed to corporations. So,
Chew on that.
chew on that. And I tell you, I deal with a tough bank. I went to sign some loan papers. We're talking about how hard it is to get a loan.
Yeah.
And they asked me what size shoe I wear. I said, "Why? Why do you need to know that?" And they go, "Well, hey, in case you don't pay off the loan, we need to know how much cement we're going to need." Oh, that's a scary one. Don't go to that bank. All right, tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Okay.